Hello friends, today I am going to talk about tax deducted at source. There were many requests to me to prepare a video on tax deducted at source. So here is the video where I'll be talking about the meaning of tax deducted at source, how is the accounting entry, and I'll talk about the tax compliance side, how to file the return, what forms are used, what are the TDS rates you have and all that. So before we move forward, if you are new to my channel, please subscribe to the channel so that you get more update about the financial topics. Let's try to understand what is the meaning of tax deducted at source. Tax deducted at source is a procedure implemented by the Indian government to collect taxes at the source of income. Here you have to be very clear. The tax is deducted or collected at the source of income, right? If certain percentage of tax is deducted by the payer at the time of making payment to the receiver, and this amount is then remitted to government. Clear? So what I'll do, I'll show you the flow, how it actually it works, so you will understand. So if you see our government of India, the source of income for government is taxes. And taxes you will be knowing one is direct tax, one is indirect tax. So direct tax is majorly on your income. Indirect tax is when you sell products to the retailer or to the customer. Now, TDS falls under direct tax, right? So under direct tax, there are two ways how the government can get money from the SECs. The first one is advance tax, and the second one is tax deducted at source, or in short, it is called as TDS. Under advance tax, the company will calculate what is the expected income or taxable profit the company will earn, and based on that, every quarter the company is going to remit advance tax to the government. So there are certain deadlines. Based on that deadline, the company has to calculate the tax and remit to the government. So here the company himself is remitting the money to the government. No third party is involved. Now, when it comes to TDS, what the law says, amount deducted by the customer. That means when the company is raising invoice to the customer, right? The customer on behalf of the company will deduct certain percentage and remit that amount to the government. Okay, so the source of income is when the customer is processing your invoice or the customer is making payment to you. That is the source of income for the company. Hence, the customer will deduct certain percentage and remit to the government, and that portion is called as tax deducted and source, right? Let's try to understand the TDS process with an example so that you will have clarity about the process. For example, there is a manufacturer ABC Limited, and the manufacturer appointed Mr. Ramesh for certain legal work, okay, as a consultant. And once the legal work is completed, the consultant raised an invoice for rupees 1 lakh. So what is the job of the manufacturer now? To process the invoice. But at the time of processing the invoice, as per the requirement of Income Tax Act, a TDS percentage has to be deducted. So here the TDS deducted by the manufacturer is at the rate of 10%, and that amounts to 10,000. That is 1 lakh. 10% of 1 lakh is 10,000 rupees. Then what the manufacturer is going to do next? The manufacturer is going to transfer this money to government account, okay, as tax deducted at source and transferred to the government account. But the manufacturer also shares the PAN details of Mr. Ramesh, because when the government receives this money, government should know also that for whom the manufacturer has deducted this amount. Because once the PAN details is shared to the government, government will pass this tax credit to Mr. Ramesh account, because this money belongs to Ramesh. Only thing is that because of TDS rule, ABC Limited has transferred this percentage to Government of India. Now, once the credit period is over, the manufacturer will transfer the net amount to Mr. Ramesh. And what is the net amount here? 1 lakh minus the tax deducted, that is 10,000. 90,000 will be transferred to Mr. Ramesh. Now, what happens to this 10,000 which the manufacturer has transferred to the government of India? This rupees 10,000 will be reported in 26 A's of Mr. Ramesh, and he can treat this as advance tax paid to the government. Right? So when Ramesh will file his tax return at the end of the year, the advance tax what he has paid directly to the government of India and the tax which is deducted by ABC Limited and remitted to the government of India, both together can be treated as advance tax paid, and the remaining tax liability only has to be paid by Mr. Ramesh if there is any amount which he has to pay. So this is how the TDS process works. Now let's try to understand when TDS to be deducted. In the previous slide, we understood that as per the law, TDS has to be deducted. There is no option that you don't do it. Now question is when I should deduct, right? So what the law says, TDS is deducted at the time of credit or payment, whichever is earlier. So it is very clear. Either you process the invoice or make the payment, whichever is earlier. At that situation, you have to deduct TDS. So for example, as per the PO or as per the agreement, if you have to release 10% advance payment, right, before you start the work. So even though the work has not been started, this 10% advance what you're paying will attract TDS. Okay. So payment or credit, whichever is earlier, will be the event on which the TDS has to be deducted. Once TDS is deducted, the same has to be remitted to government by or before 7th of next month. The TDS payment has no relation to the vendor payment. Vendor payment will be made as per the contract. That means if you are deducting the tax in the month of February, you have to pay before 7th of March. If you are deducting in the month of December, you have to pay to the government before 7th of January. Okay. But for the month of March, the TDS payment can be made on or before 30th April. So you have one exception in case of month of March where the government is giving little more time so that you pay it on 30th of April. Now let's try to understand the same example what I explained to you in the previous slide. Now with the dates, so you will have more clarity. So similarly, we have ABC Limited, Mr. Ramesh raised the invoice for rupees 1 lakh and the invoice was dated 21st of January 2025. And the credit period given by Mr. Ramesh is 60 days. So what is the meaning of credit days? That means the manufacturer ABC Limited will make the payment to consultant Mr. Ramesh after 60 days from the date of invoice. And date of invoice here is 21st of January. So what the manufacturer is going to do? Now, the manufacturer is processing the invoice on 4th of February. Even though invoice was raised by Ramesh on 21st of January, by the time the business approved and it came to finance team is processing on 4th of February. And the TDS deducted here is 10%, that is 10,000 rupees, right? Now question is when the manufacturer or ABC Limited is going to remit this money to the government, it is on 7th March 2025 because the due date is before on 7th of the next month, right? And when the manufacturer is going to make remittance to the vendor, that is on 20th of March because 60 days credit period, and the amount what ABC Limited is going to transfer is 90,000. That is the net amount after deducting of TDS. Now let's try to understand how the accounting entries will be posted for TDS. I'll take the same example. ABC Limited received consultancy service from Mr. Ramesh. He raised an invoice for rupees 1 lakh on 21st January 2025. The invoice was processed by ABC Limited on 4th February 2025. The payment terms as per the contract was for 60 days from the date of invoice. Past necessary accounting entries. Okay. I'm keeping the same example so that you don't get confused. Now, question is, shall I post an entry on 21st January 2025? No way, because the invoice was received and processed by the company is on 4th of February. So you can't post a accounting entry before that. So on 4th of February, when you're processing the invoice, what accounting entry you are going to post? Professional fees account debited rupees 1 lakh because that is the invoice value what you are receiving from Mr. Ramesh. To TDS payable, that is 10% what you are deducting from the invoice value 10,000 rupees to Ramesh account 90,000. Correct? So here Ramesh account will not be 1 lakh because you are going to pay net of TDS to Ramesh, that is 90,000. Now, as you have deducted this TDS, what you are going to do now? You have to remit to the government. And what is the due date? If it is deducted in the month of February, the due date is 7th of March. Okay. So on 7th of March, when you're remitting this money to the government, the accounting entry is TDS payable account 10,000 to bank account 10,000. So you had a credit balance of 10,000 when you process the invoice. And now after making payment, the TDS payable account will be nullified. That means there will be no balance outstanding in the TDS payable account because you're paying everything to the government. Now, the next entry will be on 20th of March, that is 60th day from 21st of January, because now you have to make payment to Mr. Ramesh. And what is the entry you're going to post? Ramesh account debited 90,000 to bank account 90,000. And by this entry or by making this payment, Ramesh account also will be nullified and no balance will be outstanding in Ramesh account. So this is the flow of TDS. You have to deduct, you have to remit, all deduction has to be parked in the TDS payable ledger. In practical scenario, companies keep TDS ledger for different sections. okay, for contractor, for professional charges, for rent, so that you can reconcile in a easy way. Yeah. Now the question is whether it is to be deducted on provisions. So what was the rule which we understood in the previous slides? TDS is deducted at the time of credit or payment, whichever is earlier. Now question is, what is the meaning of credit? Is it only invoice processing? Or if I have created a provision in the books, even though I have not directly posted to the vendor account, whether this provision will attract TDS? So let's find out. So if any provision has been created for a particular vendor and the goods and services has been received by the company, then TDS need to be deducted. We can't ignore TDS because the invoice has not been received by the company, right? That means you have received the service and you have created a provision for it. That means in future you are going to discharge that liability. So in that case, it is treated as credited to the vendor. Even though it is in a provision account, but still from the Income Tax Act point of view, it is treated as you are crediting to the vendor. It doesn't matter where you are parking this amount. TDS deducted at the provision has to be carefully monitored. Subsequently, when the invoice is processed, no TDS has to be deducted, as the same has been deducted at the time of provision accounting. Because if you deduct at the time of invoice processing, again it will become duplicate. Again, you have to revise your return, ask the department to refund back the money, which is very tedious job. So ensure that whenever you are deducting TDS on provision, you have a proper control mechanism so that there is no duplication in TDS deduction. While filing the TDS return, proper care has to be taken so that the TDS on provisions is reported correctly with the respective PAN numbers. And the most important part is that vendors has to be communicated about the TDS deducted on provisions. As they have not issued the invoice, they'll not know that you are deducting or not. But if you are creating certain provision for that particular vendor, please communicate stating that this is the provision created and this is the TDS amount you are deducting, so that they should not be surprised when they get the 26AS. They should not be surprised to see any different number filed by the company. So they should reconcile and should ensure that whatever you are remitting, they also account in their books and it should tally. TDS rates. That means at what rate you need to deduct the TDS amount from the invoice value. So what I have done is I am covering major sections which are used by the corporates, and these percentages are only for financial year 24-25. In the current year budget, there are certain changes, so you can find out that later. But what I am going to cover here is what is applicable for the year 24-25. So the major sections are like 194, 194C, 194I, 194J, 194Q, and 206AA. So under 194, that is payment of dividends by domestic company, if the dividend amount is more than 5,000 rupees, then TDS of 10% has to be deducted by the company. In case of 194C, payment made to contractors or subcontractors on an aggregate basis, the threshold limit is 1 lakh. So if you're making payment more than 1 lakh, then 2% of the TDS has to be deducted. In case of 194I, you have two categories. One is rent paid for land, building and furniture, and rent paid for plant and machinery. When it comes to land, building and furniture, the threshold limit is 2,40,000 and TDS is 10% to be deducted. So when I say threshold of 2,40,000, that means in a year you are making payment more than 2,40,000 rupees. Okay. Similarly, when it comes to plant and machinery, it is 2%. The percentage is less compared to land, building and furniture. Now coming to professional fees, 194J, fees for professionals and technical services, 30,000 is the threshold and 10% is the TDS percentage which will be applicable. In case of 194Q, generally when you buy materials, purchase of goods, the threshold limit is 50 lakhs. That means if you are having contract with any party for more than 50 lakhs, it is good that you start deducting from day first. You need not wait that it crosses 50 lakhs so that you start deducting the percentage. It is good that if you have a contract for more than 50 lakhs for next 12 months, it is better that you start deducting the TDS of 0.1 percentage from day first itself. 206 AA says that if somebody doesn't have a PAN, then what you're going to do, you'll be charging 2x of the TDS rates, and the maximum rate what to be deducted is 20%. Now, few things you have to keep in mind. TDS is not deducted on GST amount charged by the vendor on the invoice. That means if the invoice is 1 lakh rupees and GST is 18%, so the total invoice value will be 1 lakh plus 18,000 is 1 lakh 18,000. But when you are deducting TDS, when you are applying the percentage of tax to be deducted, it should be only on 1 lakh. You should not include the GST portion. GST should be excluded because that is indirect tax. You can't deduct money on that. And second point is that TDS is not deducted on reimbursement invoice. Okay, because if as per the contract, the supplier want some reimbursement from you and he gives all the backup. Okay, however, proper supporting for the reimbursement has to be collected from the supplier. And with that backup, there is 100% proof that what is asking money is for the reimbursement. So if you're making that payment, it is reimbursement and it will not attract any TDS. Now let's try to understand TDS return filing. Before that, we should understand what is the meaning of return filing. So in the previous slide, we understood that TDS has to be deducted, credit or payment, whichever is earlier. Then that has to be remitted by 7th of the next month. Okay. Now, once you remit, you are only giving the amount to the government account, but you are not sharing the details of the suppliers for whom you have deducted that amount. So TDS return will take care of that. Okay. Now, when you should file this TDS return, there are certain due dates, and before that, you have to file the TDS return. So quarter ending 30th June. That means whatever tax you have remitted till 30th of June quarter ending, the details of the PAN number, the invoice amount, everything has to be submitted to the government before 31st of July. Similarly, whatever you are deducting from 1st July to 30th of September, the details of the PAN number, invoice values, whatever details required under the return filing has to be submitted by 31st October. For 31st December, the due date is 31st January. And in case of March, you get extended period. So you have time till 31st May to provide all the details to the government. Once government receives these details, then only they will give the credit in 26 days of the suppliers. Now question is, how do the company transfer the data? Right? Okay, today's return filing is it mechanism, but are there any specific forms where the data need to be fed and has to be uploaded? The answer is yes. So let's see what are the different forms used. Form 24Q is used only in case of employees. That means the tax what you deduct on salary of the employees, those details will be filled in 24Q with the PAN details of the employees and the data will be filed. If you are remitting TDS on behalf of any non-resident or a foreign company, okay, then Form 27Q has to be used. Apart from these two, any other TDS you are deducting under any section, then Form 26Q will be used for filing the TDS return. Certain things you have to keep in mind. Once the return is filed, vendor's 26AS statement will be updated, right? Because you are sharing the PAN details and the government will pass on the credit to the vendor. Form 16A has to be issued to vendors as a proof that TDS has been remitted to the government. In case of salary, it is Form 16, but as in case of other parties, it is Form 16A. Okay. And it is mandated that you should issue that, not that the vendor should follow off. As per the law, you have to issue it. There are certain penalty also if you don't issue, because this certificate is a proof that you have deducted and you have remitted to the government. Even though it reflects in 26As, but anytime you can go and modify the 26As, you can revise your return. But the form is a supportive document for the supplier to claim the TDS amount what you have deducted and paid to the government. So that's it from my side on the today's topic. I'll be great if you can share this video with your friends. Ask your friends and colleagues to subscribe to the channel so that they get more update about different financial topics. Thank you.